right, September is here, and look out. September starts under pressure as the entire market is got some down arrows here today, or some red arrows here today. S&P futures down almost 9/10, down 0.87%. Dow futures down 0.65%, and the Nasdaq down over 1% in early trading to open up the September months. Now, some cues from last session here with most sectors and the S&P closing on a positive note on Friday. Healthcare, real estate, and consumer staples recorded the biggest gains. However, IT, information technology, and consumer discretionary stocks bucked the overall market trend and closed lower. This contributed to U.S. stocks settling down for the day, with the Nasdaq falling more than 1%. Despite the session's weakness, all major indices did record gains for August. The 30-stock Dow gained more than 3% in August, while the S&P recorded more than a 2% surge. The tech-heavy Nasdaq also gained, but it was the lowest at approximately 1.6%. On the economic front, the Personal Consumption Expenditures Price Index, or PCE, the Fed Board's measure of inflation, increased 2.6% from a year earlier in July, right in line with Wall Street's expectations. U.S. personal income increased by 0.4 month over month, while personal spending rose by 0.5%. Now, what's going on here? President Trump warned on Monday that a record $15 trillion in planned investment in the U.S. would be, quote, immediately canceled, end quote, if courts are permitted to strike down his tariff policies. This declaration comes in response to a recent U.S. appeals court ruling that deemed his administration's broad use of tariffs is unconstitutional. They said there's going to be a backup plan for that. It's likely going to go to the Supreme Court, and then in the Supreme Court might even kick it back to the Senate. Meanwhile, the 10-year Treasury bond yielded 4.27%, and the 2-year bond came in at 3.65%.